It was a tragedy that shook a small community, a man lost at sea, a grieving widow. A life insurance policy that promised security in the face of unimaginable loss. But beneath the surface of this heartbreaking story, something was deeply, profoundly wrong. The kayak was empty, the body was gone, and the details, they just didn't add up. This wasn't a tragedy, it was a performance. A meticulously planned escape, funded by a multi-million-dollar bet on his own death. Today, we investigate one of the most audacious crimes in the world of finance, the perfect death faked. This is the true story of how people vanish, not to escape their lives, but to cash in on them. We've covered staged accidents and phantom burglaries, but faking your own death, also known as pseudocide, represents the ultimate insurance crime. It's a high-stakes, all-or-nothing gamble. You're not just cheating the system. You're erasing your own existence to commit the perfect fraud. The case we're focusing on today is a composite of common patterns seen in these investigations. Let's call our subject Mark Rinaldi. Mark was, by all accounts, a successful small business owner, but success was a facade. His construction company was drowning in debt, leveraged to the hilt. He was facing bankruptcy, and the walls were closing in. Desperate people do desperate things, and for Mark, desperation bred a monstrous idea. In the months leading up to his death, he did do things that, in hindsight, were massive red flags. First, he took out several large life insurance policies. Not just one, but 3 from different companies, totaling over $3 million. He used the justification of his business loans and wanting to protect his family. But to investigators, this is known as death shopping. Second, his behavior changed. He became withdrawn, but also strangely pragmatic. He cashed out his retirement accounts, citing a bad investment. He told his wife he was going on a solo kayaking trip to clear his head of detail that would later become the cornerstone of his disappearance. The day of the trip, Mark was captured on a gas station CCTV camera, buying a bottle of water and a map. It was the last confirmed sighting of him alive. When he failed to return that night, his wife, Sarah, reported him missing. A massive search and rescue operation was launched. 2 days later, the kayak was found. It was overturned, damaged, and adrift miles from where he launched. A single oar was found nearby. There was no body. The Coast Guard called off the active search after 72 hours. Mark Rinaldi was presumed dead. As Sarah began the grim process of settling affairs, she filed the life insurance claims. The payout was enormous. For a grieving widow, it was a lifeline. For the insurance companies, it was a $3 million red flag. This is where the story turns. Insurance companies don't just hand over millions of dollars without due diligence. When a claim involves a large sum and a high-risk circumstance like a death without a body, a Special Investigative Unit, or CU, is activated, the investigator assigned to Mark's case, let's call him David Chen, was immediately suspicious. His first question was simple. Why were there 3 separate policies, all purchased within the last 18 months? Chen dug deeper, and the cracks began to show. Red flag number 1. The financial motive. Mark's business was a house of cards. The debt was far worse than anyone knew. He had a powerful, multi-million-dollar reason to disappear. Red flag number 2. The lack of a body. In most accidental drownings, a body eventually surfaces. Mark's never did. This isn't conclusive proof, but it raises the probability of fraud exponentially. Red flag number 3. The perfect accident. The kayak trip was a brilliant choice. It's a solitary activity. It's plausible, and water is a fantastic eraser of forensic evidence. Chen's breakthrough came from a digital forensics sweep of Mark's laptop. In the deleted browser history, They found searches for how to fake a death, countries with no extradition, and can life insurance investigate if no body is found. They also discovered he had applied for a passport under a different name 6 months prior. The pieces were falling into place. This wasn't an accident, it was a plan. With this evidence, Chen could prove fraud, but he had to find Mark. He worked with federal authorities to track the money. While the $3 million was frozen, Mark had taken his cashed-out retirement funds nearly $200,000 with him. They tracked credit card transactions and ATM withdrawals. The trail led to a sleepy, sun-drenched coastal town in Costa Rica. Mark, now living under the name Michael Rose, had gotten sloppy. He'd used a debit card linked to his old, secret bank account to pay for a dinner. An international operation was set in motion. Local authorities, working with U.S. agents, confirmed his identity. One afternoon, as Michael Rose left his favorite beachside cafe, he was surrounded by police. He didn't fight. He just looked, resigned. The game was over. The aftermath was devastating. For Sarah, the grief of losing her husband was replaced by the humiliation and anger of being his unwitting accomplice. She had to return every cent of the insurance money and was left with nothing but legal bills and a broken life. Mark was extradited back to the United States. Facing overwhelming evidence, he pleaded guilty to multiple counts of mail fraud, wire fraud, and making false statements. During his sentencing, the judge condemned the cold, premeditated nature of his crime, a scheme that not only stole money, but also corrupted the very concept of trust. He was sentenced to over a decade in a federal penitentiary. The paradise he dreamed of was replaced by a prison cell. You might think, well, the insurance companies are rich, who cares? But that's a dangerous misconception. Cases like Mark's are not victimless. First, the immense cost of these investigations, the international manhunts, the forensic accountants, the legal fees is enormous. And that cost isn't absorbed by the insurance company. It's passed on to you and me, the honest policyholders, in the form of higher premiums for everyone. Second, it breeds a culture of suspicion. When insurers are defrauded on a large scale, they become more skeptical of all claims, making the process harder and more adversarial for the vast majority of people who are filing legitimate, honest claims. Insurance is a system built on a foundation of trust. Fraud doesn't just steal money, it shatters that trust, and we all pay the price. Mark Rinaldi's story is a cautionary tale about desperation, greed, and the belief that one can simply vanish and start over. But in our modern, digitally connected world, it's harder than ever to truly disappear. The digital ghost you leave behind will almost always lead investigators right to your door. His plan was almost perfect. Almost. If you found this deep dive into the dark world of Pseudocide fascinating, let us know in the comments below. What other elaborate fraud schemes should we cover? From phantom ship sinkings to art forgery insurance scams, the world of financial crime is vast and unnerving.